Hello everybody and welcome back to the channel. My name is Smart Money Mo, and in today's video we're going to be going over the easiest SMC scalp strategy that you can implement to your trading in 2023. I'm going to be explaining it today, giving a full breakdown with a real life chart example to go along with it, which was sent out as a signal in my mentorship. And mentioning my mentorship, if you guys do want a full SMC mentorship, signals, the whole lot, make sure to check out first link in the description where you can pay a £100 one-time fee for that. But without further ado, let's get right into today's video. Alright everyone, to jump straight into the action, I'm going to be giving you guys a small preview to exactly what's going on with this strategy so that you can understand the slides later on. So first of all, this strategy is based on the higher time frame with entries on the lower time frame, hence why it's called the scalp strategy. So we're going to be analyzing the higher time frame, and then when we see it is fit, we will take an entry on the lower time frame using this particular strategy. It's a liquidity based strategy, so I'm going to be looking at certain liquidity grabs before entering in on my trades. And you must understand the market structure to master this strategy, because as you can see here, there's a lot to do with market structure and structural breaks. So you must understand your market structure if you really want to master the strategy. And just a quick warning, this strategy is not always going to be applicable in the markets. You'll soon come to see in the next slides when it is specifically applicable in your analysis and in the markets today. So yeah, let's move on to the next slide. So guys, as I mentioned previously, we're first going to be taking a look at the higher time frame when trying to apply the strategy. So when we look at a higher time frame chart on any sort of analysis that we're doing on any sort of forex pair, the first thing that we must understand is what sort of trend are we looking at here. Most markets are going to be trending in one direction, right? Very rarely will we see, a sort of consolidating market, right? Most of the time on the higher time frame, we're going to have some sort of trend, right? And let's just say we're in a bullish trend, right? And in a bullish trend, what do we know? Price is sweeping the liquidity at the highs, for example here, right? And it is respecting certain lows, right? So in a bullish market, we have strong lows. As you can see, this low is never broken. Another strong low as is never broken. A strong low as is never broken, right? And the demand levels over here are being all respected, right? And we also know that in a bullish market, there are weak highs. For example here, and for example here. All of the liquidity at these highs have been swept, right? So the normal assumption to make is, because we are higher time frame bullish on this market, we should always be taking buys, or our buyers should always be looking at buys. However, when it comes to understanding market structure properly, you will see that usually after we sweep a high, for example, let's just say after we swept this high over here, price of course is going to go bullish for a bit, but then we have a retracement, right? And this retracement over here is very important because it teaches us that although price might be bullish and it might be a very directional market, there will always be small moments or periods in a bullish market where price will be bearish on a lower time frame. For example, in this section here, so if I just quickly highlight this, right? If I highlight this section here and this section here, these are periods in the market where, although overall price is bullish, we have lower time frame bearish action. So like I said, over here and over here, right? And when does this occur? This occurs after we have a higher time frame break of structure, right? After we had price sweeping this high on the higher time frame, right? This higher time frame break of structure, if you want to call it that, we then had price drop off for a bit, right? Because price grabbed the liquidity at this high, and then it went into a short-term period of bearishness. However, this bearishness doesn't last forever. As we know, the directional bias is bullish. So after price is done selling off in this market on a lower time frame, it then respects a level of demand and it shoots back up, breaking this high, right? Doing what it's always been doing, right? But the key thing you have to understand is on the lower time frame, after we swept this high, we had bearish movement, right? So to clear up my chart and give one final explanation, price will sweep a high, right? As it's in a bullish market, as we can see here by the strong respected lows. After it sweeps a high, we will usually see a change in the market direction for a short period of time, and then it will continue in its overall bias. So where we're going to enter is, as I'll show you guys in a minute, is during this short period of time where the market is moving bearish, we are going to try and scalp on an entry, right? Especially after we see the break of structure, as this is the first thing that you have to identify, a break of structure or a sweep of a high, right? After we have that, then we can start thinking about implementing the strategy and going shorts and scalping shorts. But yeah, that is the overall understanding of the higher time frame when it comes to the strategy. Let's move on and go to the lower time frame. All right, everyone. So with the previous slide, we just understood the higher time frame. Now we need to go over the lower time frame and our entry. So as you can see here, this is sort of the high that we were looking at in the previous slide, right? That higher time frame high, that significant high that we expect to be broken and the liquidity to be swept from this high, right? So when price comes in and sweeps this high, and all the liquidity that's lying there, we of course are going to see a move towards the upside, right? But of course, after we break the structure, we're going to see a small period of bearishness, right? So when we switch on to the lower time frame, and we're talking like the 1 minute, 3 minute, 5 minute, 10 minute, 15 minute, right? 15 minute and below, when we switch on to that time frame, right, what we're trying to look for is a structural break towards the downside, right? Signifying a sort of market structure shift or a shift in structure, a change of character, whatever you want to call it, right? We're looking for a structural break towards the downside to signify to us that we are going to be in a short-term period of bearishness in this lower time frame on this market, right? So in this example, right, we have this low over here, and this low gets broken by price, right? Price breaks through this low on, let's say, for example, the 10 minute, right? Price breaks this low on the 10 minute, and this for me is, for example, a break of structure, right? But it's an important break of structure. Why? Because it's also a change of character, if you want to call it that, or a market structure shift, right? We have a signifying point that price is going to be bearish for some time on this lower time frame. So following this structural break towards the downside, we can then look for our entry point, right? And our entry point is going to be of one of two places in this particular example. It's either going to be from an extreme fair value gap. So within the top of this range, if we see a nice fair value gap to enter from, then we will enter from there, or we will enter from an extreme level of supply. So a supply in a premium area, and we will enter from there, and we will set our targets either at the low over here, at a lower time frame low, or we will set it at an area of demand, for example, over here, right? We do not want to set our take profits at the higher time frame low, because previously on the other slide, if I quickly show you guys, our lows were very, very strong, right? And price did not break through these lows at all, right? You can see that these lows were respected. So on this time frame, we're not going to be setting our take profits all the way at this low, because we know it's going to be respected by price, right? We know that there's probably some sort of level of demand here or here or here. There's some sort of level of demand price is going to respect, so that it shoots up again towards the upside, right? And it continues that directional bias towards the upside that we had on the higher time frame. So to quickly sum up everything here, we have our structural higher time frame break, right? Price sweeps the liquidity, right? It moves towards the upside, sweeping this liquidity, right? Then we look for our structural break towards the downside on the lower time frame, right? After we see our structural break towards the downside, we are looking for the mitigation of, for example, a fair value gap or a premium level of supply. After we see this mitigation, we can enter from there, and then we are going to set our target at a level of demand or a lower time frame structural point. For example, here, or for example, at this area of demand here, right? That is the breakdown of this strategy, right? Most of the times you will be finding it on the 10 minute, 5 minute, 3 minute, maybe 1 minute, but sometimes it might be pushing onto the 15 minute and 30 minute. And I'm still going to call it a scalp strategy because I am trying to use it mostly on the lower time frame, because I'm aiming for these smaller, lower time frame, blips, right, in a long-term bullish market, right? But yeah, Now what we're going to do is we're going to move on to the real life chart example on GBP/USD, which was a signal that I sent out to my team using this particular strategy. So I'll see you guys there. Alright everyone, here we are on the real life chart. We're going to be going over this breakdown on GBP/USD, but quickly before I get into that, I'm going to go over the proof. So this was the proof that I did take this trade. I did send it out to the team on the mentorship. You can see here April 11th, before any of the action started. So let's get into the breakdown. So here I am on the 1 hour on GBP/USD, right? You can clearly see price is bullish. We have directional bullish time frame, directional bullish market here on the 1 hour time frame, right? Price is respecting these lows. None of these lows are getting broken, and all of these highs are getting swept. So this high swept, this high, even these highs over here in the internal market, this high, all highs are getting swept, and most of the lows are being respected. So the recent low we had respected was over here, and this is our most recent high over here on this time frame, right? So price is going to sweep this high, as you guys can see here. I've already shown some of that. So price is going to sweep this high. If I just play this market, price sweeps this high, and then we begin to see the downwards momentum in a minute. There we go. So this is on the 1 hour time frame. At this point now, I am going to switch to my lower time frame. So I'm going to switch to the 5-minute time frame, because price has taken this higher time frame high, swept this high, and now we're beginning to see price move over towards the downside. So what we're looking for now is on the 5-minute time frame is our structural break towards the downside, right? And we already have that here on the 5-minute, right? We have one here, another one here, another one here, and we also have this liquidity being swept towards the downside, right? So we already have our structural break towards the downside here, right? And any one of these can just be your change of character, whatever you want to call it. Change of character towards the downside, or if you want to call it your market structure shift, right? So the key thing is we do have a structural break towards the downside, and we also have a liquidity grab towards the downside. So let's get onto exactly what's going to happen next. So if I keep playing this market, right, and price begins to waffle, starts to do its thing, right, I'm essentially looking for a nice entry point, right? And I had actually found my entry point after I saw this liquidity sweep. So over here, we have this liquidity sweep over here, right? And what that tells me is after we see a liquidity sweep, we will usually have a level of supply to enter from, right? And I found this 10-minute area over here, right? It's a premium level of supply, a very extreme level. And for me, it's the most valid level to enter from on this in this zone, right? I could have entered from this fair value gap here, but it had already sort of been mitigated at, sort of this point over here. And I like to enter off of supply zones more than fair value gap, so I wanted to enter from here. And I had also seen this lovely liquidity grab over here next to the formation of the zone. So all of the confluence was pointing for me towards this zone over here. We had multiple liquidity grabs at this level. We had the nice structural break towards the downside, and we had this liquidity sweep over here. And we're also starting to build up liquidity at this level over here, right? And so now we'll just continue to play this market. Price then again breaks structure towards the downside, which is another stronger point for me, right? It's breaking structure now to even this 10-minute level over here. So we can move on to the 10-minute time frame. We can continue to play price. I'm going to show you guys the entry right just before it happens. Don't want to skip too far ahead. So yeah, price is moving, and eventually we're going to have a strong build-up of liquidity, which is another stronger point for me, because again, it's telling me that price is going to sweep this liquidity, which is going to fuel the move towards this way, and then price is going to drop off after it mitigates this supply. Stop loss just at this high. Take profit, again, we can just put it at some sort of level of demand here, or at this low when it's going to mitigate sort of the next strong level of demand. So we can put it around this area over here next to this level of demand. So yeah, anywhere up until this point, right, that is a valid take profit. And then we can just play this market, and as you can see, with re-entries available, right, so many re-entries available, you could have caught this lovely trade. You only would have held for about 5 hours. you would have held about 5 hours intraday time frame, and you would have bagged yourself 40 pips and a good 3.5% on your account, right? And this is the scalp strategy that I'm going forward with on 2023. I will be making a full course by the end of April, right, or the start of May, on my mentorship to break down all of my new strategies that I'm going to be using for 2023. But yeah, hope you guys enjoyed this video. Hope you found the breakdown useful. Hope you're going to use the strategy in your trading. If you enjoy my videos, let me know in the comments. Please do leave a like, subscribe, and I will see you guys in the next one. Thank you very much.